Yeah, but there's got to be some way. Can't we just I don't know, close the stock market for just like the next 4 or 5 weeks? That's all I'm asking. 4 weeks. Let's just make it that. The next 4 weeks we close the stock market, call it a year, and I mean, this tax loss harvesting. You see what's going on out there. These stocks are being devastated. It's like, what are they all going to $1? Elon, you have the power. I know you don't control the stock market, but trust me, you have a lot of power. You don't even realize it. You could easily do a Twitter poll. Yeah, say something like, should the stock market close for the rest of the year? And I would. All right, I understand. You got to go. All right, man. Oh, shoot, I got to go too. Holy smokers, guys. This ain't no dang jokers. Woo! It is, it's something else out there. I put this photo in the Discord chat earlier today. That's the best explanation of the market we're in right now. It's like we're in a hurricane trying to stay up on our feet, and it's not easy in this sort of market. And you know, I think the only folks that really understand this hurricane we're in right now are the people that are really in it, which are people like myself that are retail investors that are in this market, because I think the masses don't see what's going on right now. I don't think, even like mainstream financial media sees what's going on, because if you look at the market today, it's not like the Dow's having a horrible day and the S&P 500 is having a horrible day. And so if you're just looking at literally the overall market, I mean, you wouldn't think a day like today's rough, right? Well, I can tell you, if you actually own a bunch of different stocks out there, it's rough. It is way rough, okay? And we're going to talk about the pain that's going on and what I think is about to transpire here in this market and those sorts of things. All I ask in return is make sure you hit that subscribe button. Very, very important. Subscribe to the channel because, yeah, we got a lot of drama and there's going to be a whole lot of money to be made coming out of this mess. I can tell you that much, okay? Right now, there's not a whole lot of money being made out there. Let's just put it that way. Look at Alibaba stock, new 52-week low. And if I recall, this is a new multi-year low for the stock. I don't even believe it was this low in the Rona crash, which is something else, right? Now, the stock just continues to be devastated. It seems like day after day after day after day. Where is the bottom for Alibaba? Maybe 99. I don't know. We'll have to see about that one. Beyond Meat hits a new low here today as well. This stock just continues to be beasted down. And this is a stock like many of these stocks are going to go through that's at its 52-week low. And so, everybody just continues to tax loss harvest. And we're going to talk about tax loss harvesting in this video because I always like to read through the comments of videos. And what I saw was a lot of people not understanding exactly how tax loss harvesting works, okay? And I saw a lot of people saying, well, can't you only write off $3,000 in losses? No. Okay, I'm going to explain in detail exactly how this works so everybody understands exactly why these stocks continue to get hit and hit and hit again and could continue to for the next couple weeks here, next 3 or 4 weeks actually. And exactly how all this works, because I saw there was like a big misunderstanding even in the private stock group in the Discord chat. I was reading through some of the messages in the Discord chat and I was like, holy smokes, even a lot of people in here don't understand exactly how this works and why so many funds and investors in general like to implement a strategy like this in a given year like this where you just have a lot of stocks devastated, right? Corsair Gaming's down today, but then again, Corsair Gaming is down every single day. I don't know if Corsair's ever had a day when it was actually up, okay? Yeah, it hasn't been Corsair's year. 2021 is a year to forget for Corsair Gaming stock. It's been a great year to be an accumulator of shares like myself, but as far as the actual stock price, yeah, it hasn't been pretty this year. I think, I think this one has a bright future over the next 3 to 5 years, but this, there's nothing you can say about this stock price this year. It's just been, as far as that goes. Like I said, if you're a buyer, great. If you're a seller of the stock, not the best year to be a seller of the stock unless you're trying to tax loss harvest, essentially. Honest is honestly exactly where I thought it was going to be. I always said that I feel like the stock wanted a 7 in front of it, and it happened. It happened here today, folks. It got a 7 in front of it. 791 here today. Low of 760. This stock is so poor that we can't even afford to write literally within the Hungry Bowl app, we can't even afford to write a description for this stock. That's how bad this one is that we can't even, we're like, let's just call it honest. It's HNST, I guess. Wow, okay. I've never seen that in the history of using the Hungry Bowl app where we don't have a description for a stock, but honest, hey, Learn something new every day, I guess. By the way, download the Hungry Bowl for pretty much every other stock. We have a description other than the Honest company, okay? Oh my gosh. Lemonade tastes sour. This just in, especially if you don't use enough sugar in it. And lemonade stock is sour, and it is so dang sour. Okay? $48 here today, down over 6%. New 52-week low for this stock. I mean, this is one of those stocks that it seems like no one wants to own right now, right? We have a market where everybody's tax loss harvesting. Everybody's pretty much down on this stock. And not just that, that's the thing with this. Not just down a little bit, down like a lot, okay? Funds, high net worth individuals that bought this stock, retail investors that bought $3,000 worth of stock, like everybody's down on the stock and down absolutely gargantuately for the most part. And so this is one of those stocks that, it's not out of the realm of possibility to see this stock with 3 in front of it pretty soon. And not in that long of an amount of time. It's definitely not out of the realm of possibility. So, this is one of those stocks that valuations come down a lot. It still hasn't come down quite enough for me, especially given that we have so many stocks to pick from right now that are down substantially and could continue to get hit for the next few weeks, that this one I look at and I'm like, I really like this one's business model and I like its future, but compared to some other deals I see in the market, I feel like there's some easier money to be made out there. The Planet just hit a new 52-week low, 388. So this one, yeah, the fundamentals of the company, we've seen it. It's amazing. There's no debating the numbers for the past year plus for the stock, and there's no debating the future of this company. It's very, very bright, but the stock price is not bright. Stock price is down, and it's down a lot, and a lot of folks are looking at this stock, and this is one of those that, unless you bought in 2020, let's call it mid to early 2020, when the stock was $1, $2, or $3, you're down in the stock. And most people that got in the stock in the 4 range, 5 range, 6 range, and even some bought in the 7 range, right? And so in the short term, it's just been rough. Obviously, I'm a huge believer in this one. I might have bought the stock here today, and a huge believer in that one long term. But right now, you can't say anything about it. It's just a downright bad stock price, including Palantir. So Palantir is not at a 52-week low today, but Palantir is just continuing to trend down. I'll be honest, okay? I listened to that Palantir conference call before I fell asleep, and I listened to it right on the Hungry Bowl app because we have that feature in there. And I was listening to that last night, and I walked away from that earnings call more bullish on Palantir than I've ever been on that stock. And so, yeah, at the end of the day, the more and more I look at this company, it's hard for me not to imagine this company being a $300, $500, $700 billion company down the road. The big issue with this one, just in the short term, is one, there's going to be tax loss harvesting going on. And two, obviously, this is a stock that, if you look at the short-term valuation metrics, it still looks very highly priced. And so that's where you get into this very conflicting situation where there's this long-term massive growth story that's so dang exciting in the profit machine and the sticky business model that Palantir is. But then you have this other side over here, which is the price to sales ratio still looks insane. Any metric you pretty much want to value the stock on a short-term basis still looks insane. P ratio, anything like that, right? So, and by the way, I did a full in-depth video about Palantir stock on Financial Education 3 last night. But yeah, that one's interesting. Teladoc, T-Doc. Oh, man. Look at this stock. I'm going to have to jump in this one. I'll be honest. I like this one's long-term story. I like this one's long-term revenue model. And I think it's going to build out to be a very, very profitable business over the long term. I'm going to have to dip in this one, especially if it goes under $100. This stock is just, heck, they're down to, I believe, lower now than what they paid for Livongo last year. It's an incredible, incredible move down for Teladoc. And there's no telling, that's the thing. It's November, what is it today? November 23rd, okay? November 23rd today. Tax loss harvesting usually goes on for at least another 3-4 weeks. So it's not a guarantee that Teladoc's going to go down more, but I can tell you everybody's pretty much down on this stock unless they happen to buy in 2019 before everybody even knew about this stock. And so this is one of those that it's very easy to see the stock potentially going to $90 or $80 over the next few weeks. So I'm not saying it's going to happen for sure. You never really know what can happen in these things, but you just do the math and you kind of figure out, oh man, everybody's down on the stock. There's probably could be a lot more losses taken in the stock over the next few weeks. Not out of the realm of possibility. And look at that one. STC, Smile Direct Club, I think is the epitome of a stock that no one wants a piece of right now. STC, $3 now. $3 for the stock. New 52-week low hit today, $3.14. How low can it go? Oh man, I don't know. Maybe $2. I wouldn't be surprised. I mean, heck, it's almost there. It was at 3.14. Who's to say it can't go to 2 something now at this point? You know, this one I look at as a long-term opportunity. I think this one's riskier than a lot of these stocks we've gone into in this video. But I do think this one has the most upside potential over the next 2 years as long as they can, complete this turnaround in the business, get it back to growth, get these losses shrunk down. This is one of those that, maybe it hits 2 something here. It's not, this is one of those stocks that could be $10+ within 1 to 2 years. Not many of these other stocks have that sort of potential to 4x, 5x or more in a matter of a 1 or 2 year span, but Smile Direct Club does because the stock's getting so heavily beaten down. They're almost being priced for bankruptcy now. Let's be honest. That's where the stock price is going. It's basically kind of being priced for bankruptcy. And so anything other than bankruptcy now for the stock is a huge win. When you start getting down to $3 and potentially flirting with $2, you're being priced like you're going out of business. Flat out. That's the way it is, okay? And so any way Smile Direct Club doesn't go out of business and they just have this business model grow in the future and prosper and hopefully attract new investors and, have an exciting story to tell and those sorts of things, and then maybe even profitability longer term. As long as they do that, the upside's ridiculous for a stock like this. But for right now, it's once again, this is another one of those stocks. If you bought this stock at any point in the past year, you're down huge. Even I bought the stock at $4 recently. I'm already down huge in the stock. I might have bought some shares in this one here today, okay? So, yeah, anything other than bankruptcy is a huge win for Smile Direct Club now at this point in time with that stock price going where it's gone. Zoom! Yeah, no bueno for Zoom. Zoom down 16%. I spoke about Zoom last night in a video on Financial Education 3 and talked in depth about this stock. The issue with Zoom is it's seen as a one-trick pony. The revenue growth numbers were nice over this past quarter, but the issue is with Zoom stock, it was their slowest growth since 2018. And so Zoom's going to get into this weird situation now where growth investors are jumping out of this stock because they're looking at it and it's like the growth just keeps going down and down and down, and now they just had their worst growth since 2018. Meanwhile, value investors are like, I don't want a piece of Zoom because it still looks like it's pretty dang highly priced if you look on a PE ratio and a price to sales ratio, right? PE 61, price to sales ratio 20 plus. A lot of value investors are like, and then never mind if you're a one trick, pony, like Zoom is right now for video conferencing. A lot of people are like, there's some exciting stuff with Zoom, but I don't think I want to jump in it. So now Zoom's getting this weird situation where value folks don't want in, right? Because the valuation hasn't come down enough. And then growth investors, they're like, it's just not what it once was. And so it has no momentum. The stock price has no momentum. It doesn't attract traders. And so a lot of people just like, peace out, Zoom. And so that one's going to be, it's an interesting stock to watch in 2022. I'm going to be very, very intrigued to see what really happens with this one, okay? Celsius Holdings, this one has actually had a really good past year. And shout out to Matthew Hugh, who's this is one of his top conviction plays over the past couple of years, and he's done amazing in it. So if Matthew, if you see this video, shout out to you with this stock. But this stock obviously has, dropped off a cliff very, very recently here. And I think Celsius Holdings is one of those stocks that's in danger of potentially becoming a tax loss harvest play, because keep in mind, this stock has had a big run up over the summertime and into the early fall time, and now all of a sudden it drops off a cliff. This is one that if this all of a sudden drops below 70, this is one of those that could keep dropping, and next thing you know, it's at $30, $40, just for the mere fact that all of a sudden the losses start to mount. And if people start to look at this stock as like, oh, it's another tax loss harvest play, let me go ahead and cash out and buy back in January, February, okay? So that one's going to be a very, very interesting one to watch over these next few weeks here. Purple, the mattress company, pillow company, and they make just about everything else in relation to going to sleep at night. This one just continues to be hit harder and harder. I think our market cap's lagging there. I think the market cap on Purple's now like 700 mil. But Purple just, look at the stock. The 52-week high is 41. It's at 11 today. And there's no telling where the bottom is for this one. Yeah, everybody's down on this one. Everybody's lost money on this stock. And so there's no telling where the bottom is. Shoot. This might be a stock I pick up.
I'll be honest. I mean, if this baby keeps dropping and all of a sudden it's got a 9 in front of it, I actually like the business model long term. And, you know, if you sell me a stock cheap enough, I'll buy almost anything. And this is actually one I like decently. And like I said, the cheaper it goes, the more I'm like, I might have to go ahead and buy this dang stock, okay? Tesla Essel's even down today. You know it's rough out there when Tesla Essel's even down 6% here today. Whew, okay, yeah, no bueno. And then you look at Apple. Apple's like trying to hold this whole market on its back right now. Literally, if it wasn't for Apple, I think the market would be down 10, 20%. But this baby just keeps holding everything together. And look at the last month the stock's had. It's been tremendous. If not the last couple months the stock's had. This one's holding the, you know, it's like trying to keep all the straws together for this market and keep it on its head. Like, oh, I can keep you guys together. And Amazon's trying to do the same thing. Amazon and Apple together. Like, we're going to try to keep this market together, guys, without falling. Because if it wasn't for stocks like Amazon and Apple, in terms of their performance, believe me, man, the market would be rough. And everybody would be talking about how bad the stock market is right now. I'm just flat out, Sam, look at this stock. I mean, talk about a stock that needs a beer. Oh my gosh, it is Sam. Wow. Ugh. And where's the end in sight for this one, okay? I mean, I'm down so bad that I'm listening to Marvin's Room out here. You know, you got to be down bad to listen to Marvin's Room. So, yeah, it's no bueno. So, what's going on out here? Well, Voyager token's the only thing holding things together for me, man. Who would have thought it? Cryptocurrency bailing me out? Oh my gosh. No, in all seriousness, this reminds me a lot of 2018. Different reasons to why things are happening in a little different way. This is happening, but it's reminding me a lot of November, December of 2018. And so that was a time period when the whole market fell. This isn't really necessarily the whole market's falling. This is, I would call it like 70% plus of the market's falling, and anything that's mid cap and especially small cap just continues to get devastated like if they hadn't been devastated enough already, right? And so there's a few stocks holding this whole show together because they have so much weight on the market, such as Apple, such as Amazon, such as Google, Facebook, and some of the others, right? And so Mr. Softy, Microsoft, those stocks are what's holding this whole market together. Tesla, even to a certain extent, Nvidia. Those companies are so big that they're holding this whole show together right now. And if it wasn't for the fact that money has just been, you know, moving up to those stocks, believe me, the market would be down substantially, and it would reflect what has been going on, what a lot of us have seen in a lot of these small caps, right? And so it reminds me a lot of 2018. And like I said, 2018 just had little different reasons. And like I said, it was more about the whole market in general falling. Now, it's not out of the realm of possibility that the whole market falls over the next month. I'm not going to predict that, but it's not out of the realm of possibility. If all of a sudden you could easily see a 5-10% sell off in Apple, 5-10% sell off in Amazon, and same thing with a Google and FB and even a Mr. Softy. That's not even crazy. And Nvidia, Tesla to sell off 5-10%, that's nothing. So that could easily happen in a given month, right? Like I said, I'm not going to predict that, but I'm just saying, like, that's easily possible. That's not like crazy at all, especially when you look at how much those stocks have climbed over the past month or so. A lot of those stocks are up 5-10% just in the past 1 month, okay? And so for those to give back their gains over the past month is not out of the realm of possibility at all, all right? And so I'm getting a lot of the same vibes I got in 2018. And 2018 was a year that I got to pick up a lot of stocks for dirt cheap, and that was the year that the public account was really built out in a major way, and I was able to take advantage of some deals, and the rest is really history as far as all that goes. So seeing a lot of the same trends I saw that year, just different rhymes or reasons, I guess you can say. All right, now let's talk about tax loss harvesting for a minute, because this is really important. So many people they don't know how this works exactly. Okay, for example, let's say you recognize a gain of $20,000 on a stock you bought less than a year ago, investment A. Because you held the stock for less than a year, the gain would be treated as a short-term capital gain and will be taxed at the higher ordinary income rates rather than the lower long-term capital gains rate, which applies to investments held for more than a year. At the same time, you also sell shares of another stock for a short-term capital loss of $25,000, investment B. Your $25,000 loss would offset the full $20,000 gain from investment A, meaning you'd owe no taxes on the gain, very important, and you could use the remaining $5,000 loss to offset $3,000 of ordinary income. Also very important, the leftover $2,000 loss could then be carried forward to offset income in future tax years. Assuming you're subject to a 35% marginal tax rate, the overall tax benefit of harvesting those losses could be as much as $8,050. Okay? So essentially, the $3,000 only is you know, a lot of folks think, oh, you can only write off $3,000. That's if you don't have gains to write it off against. So if all you have is this loss, then yeah, $3,000, you can carry that forward for future years, okay? But if you have, a lot of people have made a lot of money in the stock market this year. I think I'm at probably over $500,000 booked profits this year between my big dog account and the public account, okay? And so I'm not somebody that does this strategy. I'm not saying anything's wrong with it. It's just I don't personally do the strategy, but if I wanted to, I could easily offset that $500,000 plus in gains I've taken this year with a bunch of stocks that are down for me, right? Corsair Gaming and some of the others, right? Corsair Gaming is actually the biggest one of the bunch that I would be able to take capital loss on and then write those off against those gains, and my tax liability would be much of a substantial rate, okay? And the way a lot of people look at this is they look at it from the perspective of like, who's to say these stocks aren't going to go down more the next month or two? Look at the trend for these stocks. And you look at something like a Corsair Gaming specifically, the stock just downtrends every day anyways. And so people are like, dude, it'd probably be 22, 23 bucks in a month or two from now. Let me just take my loss, buy back, and call it a day. And then I can still hold long term. And so that's the way a lot of people think. Once again, not a strategy I employ because I just think it gets you into kind of a short-term mindset. However, I can't pick on anybody for doing the strategy because flat out it pulls the taxes you want to pay down substantially in a massive way. And so I think this is like a PSA public service announcement. Make sure everybody watches this part of the video. If you have any friends or family that are curious about this or they kind of don't know how this works, share this with them, all right? Because this is a really, really important thing that I think it's just good that people are at least educated on how this works. Because one, when you see stocks dropping left and right in the back half of the year like they are right now, you're like, what the heck? I guess no one wants to own stocks anymore. Got to understand what's going on in the market, and as well as if you ever want to implement these strategies as well, okay? Now, I'm going to likely do a video later today on Financial Education 3 on all the stocks I bought today, which it's a long list, okay? And so if you want to see that video later today or tonight when I post that, make sure you're subscribed over Financial Education 3, and I'm going to post that over there, okay? Much love as always, guys. Stay strong in the hurricane. We got it for at least the next few weeks, and have a great day.